Warren Buffett knew that the stock market is going to crash. If you just go to the last year when the stock market was going to the roof and you would tell people that the stock market is going to crash 6 months later, people would think like you're insane. But if you look at the market today, everything is a crash. Even the S&P 500 is down by around 10%. And if you look at other stocks such as Tesla, Meta, Apple, some of them are down by 20%, 50%, 70%. So while everybody is freaking out, including Wall Street, there is one person who is extremely calm, and he was expecting and predicting this crash. In fact, he was getting ready like no one else. But people laughed at him back in 2024 because the stock market was going through the roof. Tesla alone during that period has grown by 237%, and people were expecting that it is going to grow much more than that because he was about to become the closest person to the president of the United States. Apple has grown by 53%. Now 53% might not seem like a lot, but we are not talking about little company. If a small company that's worth, let's say, $50 billion and it grows by 50% to $75 billion valuation, that's fine. It's not literally a big deal. But when you have a company that's worth $3 trillion and it grows by 50%, we're talking about over $1 trillion of valuation that's being added to the company in such a short period of time. If you look at Nvidia, you will see the same thing. It has grown by 57%. Meta, 60%. So in 2024, nobody expected a crash because the market was growing significantly strong. But there is a very beautiful saying that says that be very careful when everyone is buying, because that's when the crisis is about to hit. And Warren Buffett understands it better than anyone else because he has been taking advantage out of every single crisis since he's been in the market. And he has been in the market for such a long time that most people cannot even comprehend that. So here in this video, let's find out how exactly Warren Buffett predicted the current crash and what Warren Buffett believes is going to happen next. Because the crash is not over yet. The crash is still happening. Yes, sometimes you might hear the news that the stock market slightly recovered, but that's just a daily recover. The question is that how bad it is going to get and how exactly Warren Buffett has prepared himself for this massive crash. If you're ready, give this video a thumbs up and let's dive in. Warren Buffett holds a long list of portfolio within Berkshire Hathaway because he manages that company, and the valuation of Berkshire is over $1 trillion and it contains multiple other stocks. They invested in Apple, Bank of America, Visa, Coca-Cola, and a long list of other companies. But in the graph of the S&P 500, I want to show you exactly how he has been selling stocks over the last 2 years. Now, the first crisis was in 2022 when the Fed increased the rates dramatically from around 0.5% to over 5.5%, and that led to a stock market crash. That was the worst time to sell your stocks because stocks instantly went down. However, if you go to the end of 2024, which is the fourth quarter, that is when Warren Buffett suddenly started massively selling off his stocks, and he sold almost $15 billion worth of stocks. That might not seem like a lot of money for a company that's worth over $1 trillion, but even though that is still billions of dollars, $15 billion. And when Warren Buffett sells, he doesn't instantly sell his entire portfolio. You want to dollar cost average your investment, which means that if you want to sell, you're not going to do that overnight. You're going to sell some today, some next month, and over a period of a year, you might actually sell everything that you plan to sell. That's exactly what is happening over here. You can go to 2023, and in the first quarter, he's selling over $10 billion. In the next quarter, which is the third in 2023, he sold around $5 billion worth of stocks. Now, most of the stocks are Bank of America and Apple and some other companies, because his stake in Apple was so huge that it was probably over 50% of his entire portfolio. Imagine one stock is so huge and made you so much money that when you look at your portfolio, that one stock single-handedly represents half of maybe 60% of your portfolio. That is great because you made so much money, but on the other side, it exposes you to so much risks. And one day, if something is wrong with that business, imagine how much money you're going to lose. And that can drive out investors when they see that one stock had such a massive negative influence on your investment portfolio. In the next quarter, he sells around $8 billion. But here's where it literally gets interesting. In 2024, he realizes that now things are getting really, really strange. This was the period when he was already expecting a crash. And you can see that there has been multiple sell-offs by Warren Buffett. In 2023, he was already thinking that this market is overvalued. Now I gotta do something. I gotta start selling my stocks before everything is crashing. And the beauty of the market is that it is very unpredictable and there is nobody who can potentially exactly time the market unless you are Nancy Pelosi. But if you're not, then you cannot possibly do that. And that is why he started selling slowly. But in 2024, he instantly sells $17 billion because he's like, nah, this is getting out of hand. This is extremely overvalued. In the next quarter, he sells $75 billion worth of stocks. Third quarter, he sells $35 billion. So at this point, he has already sold around $120 billion worth of stocks in around a period of 12 months or maybe slightly longer than that. And he ends 2024 by selling an extra $6.7 billion. And that's why he ended up with a portfolio where almost 50 to 60% of the entire portfolio is pure cash. His cash position is around $324 billion. You never want to sit on so much cash. You want your money to be invested in such a way that in companies that consistently grow. Cash in itself is useless unless you are investing it in a place that gives you a lot of interest. And that's exactly what Warren Buffett does. He's not simply keeping so much cash in the bank. Most of that money is invested in cash equivalent assets. And we're talking about 3-month treasury bills. And right now they're paying a pretty decent interest rate. Of course, that interest rate is nothing compared to what the stock market can actually get you. But nonetheless, that's better than nothing. So you can clearly see that Warren Buffett was preparing for a crash since the end of 2022. Now, the question is that what exactly he bought and what exactly he sold. Because during this time, he also purchased and invested in some stocks. And when you understand what exactly Warren Buffett is selling and what exactly he's buying during a crisis, you can clearly understand, or maybe you can have a clue about his investing strategy. You are going to have a clue about what exactly is going on in his mind and why he purchased this specific business and sold this specific business when he's expecting a crash. So based on the graph that I showed you, it is very clear that Warren Buffett was trying to time the market over the entire period of the last 2 years. Most of the stocks that he sold was Apple, and that's because Warren Buffett most likely believes that the tech sector is in a huge, giant bubble, and that bubble has been accumulating since at least 2018 or 2019. And the last couple of years, with so much quantitative easing, we probably made the situation so bad that Warren Buffett believes that it is actually astronomical high to pay that much. Of course, he did not sell or he did not exit his entire position in Apple. He sold most of it, but he still keeps a large position in Apple. It's something around $50 to $60 billion, if I'm not mistaken. Now, another company that Warren Buffett exited was Bank of America. I was a bit confused because Warren Buffett is a big believer in the banking sector. Because unlike other sectors, the banking sector is a huge, great, reliable business, because you want a service where people consistently come and buy your product. And banking is something that people cannot fundamentally live without. You use your credit cards, you use your debit card, you keep your money in a bank, you probably receive your paycheck through a bank, so you consistently use banking services. And these companies are huge, they have consistent demand, so their profits and the revenue is extremely predictable. And these are the two companies that Warren Buffett believes so much, and yet he sold massive stakes in those businesses. However, on the other side, he invested in other businesses. One of the great businesses that he started investing is Constellation Brands, and that is a company that contains within itself a lot of beverages such as beer and wine. When we are going to get into a recession, when we are going to get into a financial disaster, people will not stop drinking beer. people will not stop drinking wine, because wine and beer are like soft drinks. People get addicted to them and they keep drinking them even though there is a crisis, even though that they cannot afford it. Now, some people literally get a credit card debt in order to keep drinking when they have an addiction. And that is the strategy that Warren Buffett is following. Now, another industry that he invested a lot was Occidental Petroleum. And that's because when Trump became the president, he made it clear that we are going to boost the American oil and gas industry. And Warren Buffett feels confident that at least within the Trump presidency, the energy sector is going to boom. The energy sector is going to grow dramatically. Whenever there is a crisis, risky investments go down because people don't want to risk it. Luxury things go down instantly because people have less money to spend on luxury things, especially when you have a recession. But on the other side, the necessities stay the same, or at least grow, because no matter how big the crisis is, you're not going to stop using energy. No matter how big the recession is, you're not going to stop using your car. So the demand for energy will stay there no matter what. And that's why during recessions and financial crises, the stock prices of companies that sell a necessity instantly rise, because investors want to keep their money in a safe place. While during great times when everything is growing, those necessity companies such as energy, they don't literally do that great, because investors are looking for a slightly more riskier investment, and that's why they usually go into more riskier assets such as tech or crypto or anything related to that is slightly more risky. And that works, and that applies to everything within the entire market. And I guess that is the reason why Warren Buffett have gone into the Occidental Petroleum over the last couple of months. Another business that he invested was Domino Pizza. One reason behind that could be pizza is almost a necessity, because that is something that people often eat, and it's a fundamental part of the American culture, and people would still keep eating pizza. And another reason also could be behind that is that Warren Buffett simply got a really great deal. He saw an undervalued stock, a company that is not much shaken by a recession, and even though that there is going to be a recession, his billion-dollar investment is going to be safe. And that could be the logic behind it. But again, if you take $1 billion compared to how much cash he's holding right now, that $1 billion is absolutely nothing. But here is the real question. Here is the most important question of this video. What are the real reasons behind Warren Buffett's actions? What exactly drove him to start selling his stocks starting from the end of 2022? And he spent the entire 2023, instead of looking for opportunities like every other investor has been doing, he has been going mad about selling all of his stocks, now sitting on so much cash. What could be the real reason? And I'm gonna show you that right now. There is something that's called Buffett's indicator, and that is an indicator that Warren Buffett came out in order to evaluate the total market. Not a particular stock. This indicator doesn't work with one stock or two stocks or three stocks. This is an indicator to find out whether the entire market at that particular point is overvalued or undervalued. And that is a very simple indicator. There is absolutely nothing complicated about it. The logic behind it is that you take the entire market cap of the stock market in the US. So we're not talking about just the NASDAQ or the S&P 500. We're talking about the entire equity market in the United States. And we take that number and we divide it by the gross domestic product, or GDP. And that is when we get a percentage. And that percentage could tell us a lot about the state of the market, if it's overvalued or it's undervalued. Now, some people have different opinions about this metric, but this is the metric that Warren Buffett often uses to have a broader image or a picture about the state of the market. Now, if we take the current numbers, current market cap of the entire market is around $62.2 trillion. Now, that's a lot of money. If you take $62.2 trillion and you look at the GDP of the United States, which is a little less than $30 trillion, it's something between $29 to $30 trillion. It depends on the latest data, because the GDP has been growing substantially over the last 2 to 3 years because we had so much printing of money, especially since 2020. But let's take $29.5 trillion. So if we take $62.2 trillion and we divide it by the total GDP, which is $29.5 trillion, we are going to get 210%. And now the question is that what does this 210% actually means? Now, based on this theory, if the percentage that we're getting out of this math that we simply did out here is going to be less than 100%, then the stocks are undervalued. So if this percentage, for example, was, let's say 70%, then the market is most likely significantly undervalued and you have to invest. This is the time to invest. Of course, you have to be extremely careful. You shouldn't just randomly buy stocks, but the market overall is undervalued, and that means that chances of you getting a really good deal in the market are much, much higher. However, if that number is around 100, then the market is fairly valued. It's not overvalued, it's not undervalued. You cannot possibly expect a crash. Yes, you still can find really great deals in the market, and most of the stocks are fairly valued in the market. But here is where it really gets interesting. If this percentage that we have right here is over 100%, then the market is overvalued 100%. If it's higher by 5 to 10%, it might not literally be a big deal. But I want you to take another look at the percentage that we have right now. It's 210%. So if we have anything more than 100%, it's already overvalued. Let's say 120, 130, 150%. And now we have 210%. Do you see how much overvalued the market is? And if you literally just do the math, you just go to the end of 2022 and you do the exact same math based on the Warren Buffett's indicator. If I'm not mistaken, at the end of 2022, this indicator used to show that it was like around 170 or 180%. But in 2024, if you do the math, suddenly you see that it was very close to 200. And right now, even after the market crash, the percentage is 210%. So based on this theory, what is going in his mind is that the entire market is massively overvalued. Let's take this one step forward. Let's take this indicator and let's go back to 2007, right before the 2008 crisis. How overvalued the market was in 2007 that it crashed so much. Let's just do the math. The market cap of the US economy or the US stock market was $17 trillion. Now, that's a lot of money. I mean, think about that for a moment. I want you to just take a look at this. Back in 2007, the market cap was $17 trillion. Today, it's $62.2 trillion. And now ask yourself a question. What exactly has happened? The market has grown multiple times. Over this period of time from 2007 to today, we went through so many crises. The market kept growing, and now it has grown from $17 trillion to $62 trillion. And I want to ask you a question. Have you been investing all this time? Have you ripped up the profits that you made over this period of time? Most of you did not do that because most of the Americans do not invest in the stock market. 90% of the stocks are being held by the top 5 or 10% of Americans. In 2007, the market was $17 trillion and the GDP of the US was $14.5 trillion. And that meant that the Buffett's indicator was 117%. And even 117% was already meant that the market is overvalued. And based on this indicator, Warren Buffett sold most of his stocks before getting into the 2008 financial crisis. And that gave him so much leverage to bail out so many banks. He bailed out, I think he bailed out literally every bank in the country that actually survived the 2008 financial storm. In 2007, the market was overvalued by 117%. Today, it's overvalued by 210%. Do you see why Warren Buffett is so worried about the market and why he was so confident that it's time to sell his stocks? Even though that in 2023 and 2024, most people called him insane for selling so much because the market was actually growing tremendously high just by looking at the top largest companies in the US. Just imagine what happened to smaller companies that had a much bigger potential to grow. Some of those companies has grown by 200, 300, 500%. But I guess Tesla was the best example because Elon Musk at this point is probably one of the greatest marketers of all time. He aligned himself with the person that won the presidency, and therefore the stock actually has grown. It has grown by 237%. But here is the second reason that could explain to us Buffett's actions. You see, if you read his annual letter to the shareholders that he wrote the last year, one of the things that he said in that letter is that, I'm going to quote him right now, And never forget that we need you to maintain a stable currency, and that result requires both wisdom and vigilance on your part. He's literally talking to the Washington and warning them that the dollar is no longer stable. And that instability of the dollar, if you don't take care of the dollar is going to collapse. And the only reason he would do that if he's worried. If everything was fine, if the dollar was fine, why would he write something like that? Because he writes this short little letter every single year, and he makes sure that he writes the most important things that he thinks that investors of Berkshire should keep in mind. Over the last couple of years, the market has grown faster than anybody can possibly imagine. After the 2008 crisis, when everything collapsed, something fundamentally different happens, and the market is literally growing, especially the last couple of years. Like in the last 5 years, the market has grown so much that nobody has seen any kind of that growth in the entire history of the stock market. Like back in this period, Warren Buffett couldn't even believe that something like this is going to happen 50 years from now. And that happened because there was so much quantitative easing in the market. There was so much money have been thrown into the market that it actually literally changed the foundation of the market. Which is why instead of just saving your money, you should think about how you should invest your money. Period we're getting into the market is a very chaotic period where the market is probably going to keep crushing through the entire 2025. Maybe not the entire 25, maybe it will recover by the end of 2025. Maybe the real crash will happen next year. But the most important thing is that you must be ready. You must prepare yourself. You must know which stocks to focus on. You should know how to analyze stocks. You should know which stocks are going to rise. And the only way you can know that is by mastering the art of stock market. Because stock market isn't simply just randomly picking up stocks. And you have to do that based on your needs and based on your understanding of the market. If you simply randomly follow someone else on the internet or any other great investor, they have a strategy. They buy a particular time and then they sell it a particular time. But if you're trying to follow their strategy without having a clear understanding yourself about everything, what's going to happen? You're going to buy when they buy, but then you're going to sell at the wrong time because you got emotional and you did not understand the underlying reason why that stock has grown and why the stock has fallen in that particular time. Which is why educate yourself, master the stock market, and good luck.